Imagine this. We have two investment options available, both houses in Toronto. Both properties have multiple units and both pretty much need the same big renovation. One is in a more prime location, and that's why it has a 25% premium on it. But the better location also gives it better rents, and you end up getting double the cash flows as well. So, which one is the better opportunity? Well, a lot of times people immediately look for answers in cash flow, but the better way to break this down is to actually look at the different sources of return by breaking it further into rent yield and value add gain. And so in this video, we'll show you how we would more accurately compare these two options, and hopefully this can help you learn more about how to spot similar deals too if these are the types of projects you want to take on. Let's get started. Let's take a look at the market value of these investment opportunities that have been fully renovated in these areas. The turnkey house in the more expensive area could be sitting at around $2 million. On the other hand, the cheaper one, which is a bit further away from downtown but still within the 416, comes closer to $1.4 million. But here's the thing. We want to take advantage of some value add gain, and so we're going for properties that are big projects. Now, considering the amount of work required, we might end up being able to get a 20% discount. And so as a result, the more expensive property ends up selling for $1.6 million, while the cheaper one goes for $1.1 million. Now, let's crunch some numbers and talk about the capital requirements for these two properties. Honestly, both these properties do need a lot of money because you can't get a mortgage for the $200,000 renovation that we're going to be doing. And so with a 20% down payment, the more expensive house ends up needing closer to $580,000, while the cheaper one comes in at around $460,000. And that's how we ended up getting roughly a 25% premium on the more expensive house. Next, let's look at rents. The more expensive house brings in close to $9,300 in rents, whereas the cheaper one might get you around $6,600. So when you compare the cash flows after considering operating expenses and mortgage payments, the cash flows are more than 50% better on the bigger house. So even though the bigger house is more expensive, it does appear to have better returns on investment, which does make it better. But hold on a second. If we go back to the market cap rates on the turnkey opportunities in these areas, the cap rate is actually pretty similar. So basically, the reason why cash flows are better isn't because the better area has better rent yields, but actually because you can get more value add return on the better one. Think about it this way. When you apply a 20% discount on a $2 million property, your property value shoots up by $400,000 once you renovate it. And so once you take away the $200,000 that you put into the upgrades, your value add return here on the more expensive property is $200,000. On the other hand, with the $1.1 million property, it turns into $1.375 million post renovations. And so the value add return here ends up being a smaller $75,000 simply because renovations still cost $200,000 in both situations. Another way to think about it is that looking at cash flows alone against the purchase price plus renovations pretty much blends your rent yields and value add gain into one. You still pick the right option if you're trying to choose the best property, but just keep in mind that the reason for this is because of the value add gain that you get and not because that location generates better rent yields. I know, the cost ends up being the biggest barrier to entry for the more expensive property, and so here's one more thing typically going for lower price properties. Appreciation. Now, I can't say for sure, but history does tell us that lower priced homes usually get better appreciation over time. The thought behind this is the simple truth that more buyers can qualify for cheaper homes, and that ends up fueling more buying momentum and growth in areas that might not be as nice for now. Eventually, when the population is big enough for more public and private sectors to invest more money in to gentrify these areas do end up becoming the next up and coming areas and end up seeing higher price growth over time. Now, if you have more money for both properties and you're looking for the best risk-adjusted return option, then the bigger property is probably your best bet. Appreciation in more mature areas might be slightly less than the up-and-coming areas, but it is definitely more stable. And the bigger one that wins, of course, is the value add gain that we talked about, and you end up getting stronger cash flows too. The other thing to keep in mind is the limit on the number of properties you can finance. There is a cap on this, and lately it's coming down for many big banks. And so if you think about it, by buying larger properties, you end up being able to take full advantage of the limited number of properties allowed on the mortgage side, which is a good strategy as well. As you can see, there are actually a lot of things to consider when it comes to investing in real estate. And if you're feeling overwhelmed going at it on your own, you don't need to be, because our team is here to help. We're a real estate sales brokerage based in Toronto, specializing in investment houses in Toronto, and we can help you get started or grow your real estate investment portfolio. Just take the first step and connect with us privately by heading to this link. Now, if you enjoyed this video and you want to learn more about real estate investing in Toronto, be sure to show your support by liking this video and subscribing to our channel. We cover a wide variety of topics, including Toronto real estate market trends, Toronto-specific housing policies, interest rates, and overall investing strategies. We want to make real estate investing easier for you, and that's why our team also provides a wide range of services for Toronto real estate investors, from planning and analysis to sales, renovations, leasing, and property management. Just visit our website or find us on social media to learn more about what we can offer. Thanks for watching, and we'll see you in the next video. Bye.